Ladies and gentlemen, good day and welcome to the Q1 FY23 earnings conference call of Sapphire Foods India Limited, hosted by Orient Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Kapoor from Sapphire Foods India Limited. Thank you, and over to you, sir.
Thank you, Faizan. Good evening, everyone, and a warm welcome to Sapphire Foods first quarter FY23 earnings conference call. I'm Rahul Kapoor from Sapphire Foods Investor Relations team. Today, I'm on the call. I'm joined by Mr. Sanjay Purohit, who is our Group CEO and whole-time director, Mr. Vijay Jain, who is our CFO. We've already uploaded our investor presentation and earnings press release on stock exchanges and our company's website. We'll begin the call with a commentary from the management, which will be followed by a Q&A session. This call may contain some of the forward-looking statements, which are purely based upon our belief, opinion, and expectation of the company as of today. These statements are in no way guarantee of our future performance and involve risk and uncertainties that cannot be predicted at this point in time. With that, I'll hand it over to Sanjay. There you go, sir.
Good afternoon, everybody. Sanjay Purohit here. I'm also joined by Vijay Jain, who's our CFO, and both of us in tandem will take you through the highlights of our quarter one performance. Quarter one this year has been the first quarter since the COVID pandemic when we've seen a full recovery in our operating hours, and that is translated into a positive impact on both KFC as well as Pizza Hut businesses, especially the dine-in businesses, and their strong recovery. Dine-in on KFC has come back to pre-COVID levels, and Pizza Hut is just a shade short at 85% recovery. We've had a really strong quarter. We delivered our highest ever quarterly revenue at 544 crores and our highest ever EBITDA of 111 crores. Our previous highest EBITDA was 108 crores, just for the record, in quarter 3 of FY22. This excluded that additional incentive that we accrued in the quarter, and we had called it out at that point in time. So strong quarter, highest ever quarterly revenue and highest ever EBITDA. This EBITDA post-India stood at 20.5%, up 640 basis points year on year. Adjusted EBITDA was 72 crores at 13.3%, up 1,020 basis points. And PAT stood at 38 crores at 7%, up 1,570 basis points. I think the important part here is that this strong performance is despite the macroeconomic challenges that have impacted our Sri Lanka business, and I'll talk about it in a minute. But just at a broad level, Sri Lanka used to contribute about 25% of our overall profits in the last year, in FY21-22. Today, it contributes 10% in quarter one. So despite Sri Lanka's performance, and that performance also I'll peel the onion in a minute or so, largely because of foreign currency translation. Therefore, the India business has really done well and has more than compensated for the flat Sri Lanka numbers. Let me now talk about the three businesses. So KFC had a very strong quarter, 65% SSSG, and almost we doubled in overall revenue. We talked about inflation in the last quarter, and to mitigate this inflation, we had taken a price increase of about 9%. So though gross margins dropped a bit, our overall cost efficiency programs enabled us to deliver amongst the best ever restaurant EBITDA at 20.3%. So KFC, really strong quarter we have had really strong quarter we had had. What is heartening is our Pizza Hut performance. And this continues to validate what we have said and tom-tommed about continuously, that our compact omni-channel restaurant strategy, which delivers optimal customer experience in dine-in, takeaway and delivery, is the way for the brand to differentiate itself and be a strong number two. And as a result, we delivered SSSG of 47%. Overall revenue has increased by 85%. We took a lower price increase on Pizza Hut and limited it to 5%. But as dine-in sales recovered, our core portfolio also, our legacy core portfolio also did well. Our dine-in sales recovered, delivery sales held, and together with the cost efficiency programs, we delivered our healthiest 14.8% restaurant EBITDA margin. So Pizza Hut performance was very strong. And I think the other positive part on the brand is that there was a significant gap in our product price portfolio of Pizza Hut, and this is really a pizza under 100 rupees. And this has been plugged with the launch of the very differentiated flavor fun pizzas. I'll speak about it more when we come to the Pizza Hut section. This was test marketed in Chennai and in Hyderabad in quarter one with really good results, and those encouraging results have emboldened us to launch it nationally on the 25th of July. So that's another positive development on Pizza Hut. Let me come to Sri Lanka. I think the external environment has been challenging and continues to be so. It has not deteriorated further, and therefore there's some amount of stability that has come back to Sri Lanka. On the back, so we delivered an overall 53% SSSG in Lankan rupee terms and a 93% increase in overall revenue. So while we took price increases, inflation was even higher, and therefore gross margins dropped, and therefore restaurant EBITDA also dropped to 15.5%. The absolute restaurant EBITDA grew by 65%, but once we do the currency translation impact, in Indian rupee terms, the absolute restaurant EBITDA remained flat over last year, quarter one. So we continue to do well from a local business perspective in Sri Lanka. However, the situation continues to remain challenging but stable, and I would say just very marginally improving, perhaps over the end of July and August. If you remember, we had advised that we should be able to double our restaurant count, which was standing at 550 restaurants in December 21. We said we should be able to double it in 3 to 4 years, and accordingly, our total addition of 37 restaurants has kept in pace with that guidance that we had given. We opened 18 KFCs, 16 Pizza Hut in India, 2 Pizza Hut and 1 Taco Bell in Sri Lanka. So this was the broad highlights. Specifically from a number perspective, our restaurant sales, I'm now referencing the slide presentation that you have got access to. I'm on slide number 7. Our restaurant sales was 544 crores. Adjusted EBITDA, so that's up by 80%. Restaurant EBITDA 72 crores, 13.3%. The same quarter last year, which was COVID impacted, was 3.1%. Our EBITDA is 111 crores, up 161% over 43 crores in quarter one of FY22, or 20.5%, up 640 basis points. PAT is 38 crores versus negative 26 crores in the same quarter last year. so 7% PAT. I'll now hand it over to Vijay, who will take us through the specific consolidated financial highlights, and then I'll come back to give you indication of KFC, Pizza Hut, and Sri Lanka.
Thanks, Sanjay. Good afternoon, everyone. I'll take on from slide number 9, Concall financial highlights. As we said, restaurant revenue of 543 crores was highest ever for the quarter. Gross margins, as estimated, we were expecting a drop in gross margins on account of inflation and our price increase being lower than the inflation. So we dropped the gross margins by 220 basis points. And we had guided that in spite of a drop in gross margins, we were confident of not only sustaining but improving our restaurant EBITDA margins. So restaurant EBITDA margins of 18.5%, up by 690 basis points over corresponding quarter. And even if you look at sequentially, it was 18.3% in quarter 4. This translated into higher adjusted EBITDA of 13.3%, up by 1,020 basis points at 72.2 crores. Slide 11, corporate EBITDA or consolidated EBITDA at 111 crores, which was highest ever. As Sanjay mentioned, the previous highest was in quarter 3 of last financial year. This was up by 640 basis points over corresponding quarter and a growth of 161%. We delivered a PAT of 7% at 38 crores, up by 1,570 basis points. So the corresponding quarter was a loss making on account of COVID impact, second wave of COVID impact.
Yeah. Let me quickly take you through KFC's performance. As you could expect, as I spoke about this, when operating hours started to normalize, dine-in sales recovered. So dine-in sales as a contribution, I'm talking about slide number 14 of the presentation. Dine-in was 46% and delivery held, but in a contribution sense, came down to 35%. When we look at comparable stores and their recovery versus, so our recovery at a channel level, absolute ADS versus FY20, dine-in is 102%, takeaway is 112%, and delivery is still double of what it was in FY20. From a new product launch perspective, we had the KFC popcorn nachos launch, and that's done quite well. It's a very differentiated product, and I invite everyone on the call to perhaps try it once. It's really, really tasty. I'm now going to go to some of the new restaurant launches. I wish I could show you some slides, but there was a really important gap in our mall portfolio that we plugged in quarter 1. Perhaps the largest and most successful malls in the country that fall in our territory is the High Street Phoenix or the Phoenix Palladium Mall in Parel. And there we've been knocking on the doors of the mall. While we've got great relationships with the mall, they were unable to find a space for us for 6 years. And then finally, we were able to, enter the mall in what is perhaps an absolutely iconic store location. And to my mind, it's a one-off location. I haven't seen any such stores anywhere else in the country. So within a successful mall, you have a separate structure. Many of you are Mumbai-based, and therefore you know what I'm talking about. When you go on the road, you can see the separate structure, and KFC is open there. We're very proud of that store. It's doing really well. And then you can see on the next slide, slide number 19, some of the other stores that we have opened in Chikli and Shalimar Bagh, Delhi, in Gergumbakam, Chennai, and then Vicino Mall, Mumbai. Vijay will now take us through the numbers.
Slide 20 on KFC financials. Our SSSG was 65% over corresponding quarter with the ADS of 144,000, a growth of 37%. Restaurant revenue was at growth of 98% at 353 crores. This was highest ever revenue for KFC. The gross margins dropped by 200 basis points. And if I break this down into two parts, one was on account of mix. Our delivery mix was lower compared to the corresponding quarter. Last year, same quarter, it was 62%. Now it has come down to 35%. Generally, our delivery prices are 10 to 15% higher. So roughly 50% of drop is contributed by the change in mix. The balance 50% is on account of inflation. And as I said previously, that our price increase was 9%, while inflation was well into double digits, into mid-teens. Still, we were able to drive restaurant EBITDA margin expansion, 20.3%, one of the highest ever margins on KFC. This was due to dining recovery as well as the cost efficiency, which enabled us to deliver a very strong EBITDA performance at restaurant level for KFC. So overall, very strong quarter for KFC. Our momentum continues in terms of store expansion, the revenue growth, and still delivering some amount of margin expansion in KFC.
Quickly, the Pizza Hut channel sales. I'm on slide number 23. Dine-in had a smart recovery and now contributes 37% of the total business. Delivery contribution has dropped to 47%, but at an overall ADS level continues to hold. When we look at recovery versus FY20, dine-in is at 85%. And when I look at, when I compare dine-in 85% to, KFC at 102%, largely we see this gap in coming out of Karnataka and perhaps a few mall stores where dine-in transactions are still not back to pre-COVID levels. So that explains the slight gap between dine-in recovery on KFC and Pizza Hut. Other than that, I talked about the Flavor Fun Pizza launch. I'm on slide number 24. The starting price range is at 79. There are 5 delicious sauce flavors. So there's a classic Italian, tandoori, cheesy, and Szechuan sauce. It comes only in the personal pan size range, and there are 12 pizza offerings. So it goes up to, I think, about 149 or 189 for the top-end non-veg range. We are really excited with this launch. It comes with a cheesy dressing, and it tastes absolutely fantastic. And basis the encouraging response that we've got in the test markets that we ran, Chennai and Hyderabad, we are hoping that this will also do quite well at the national level. We continue to open stores in Pizza Hut, and you can see some of the pictures. We're very proud of the kind of stores that we open also. That Capital Mall, Nala Sopara Mall, we're doing about 1 lakh ADS, and it's just a beautiful store. And I think similarly across the board, the stores that we open look good. The customer experience is great. Quickly, Vijay, on the numbers.
Yeah, slide 28. Pizza Hut delivered SSSG of 47% with ADS of 61,000 and a growth of 24% versus corresponding quarter. Again, Pizza Hut 2 delivered a all-time high revenue of 122 crores, up by 85% over corresponding quarters, and a 16 restaurant additions in the quarter. The gross margins dropped on Pizza Hut by 110 basis points, led by inflation on cheese, packaging, and a bit of oil. We had a excellent margin expansion, 14.8%. This is probably one of the best ever performance in case of Pizza Hut restaurant EBITDA level. I think the previous highest was Q3, the festive quarter, where we delivered 14.9%, excluding the additional incentives. So really good margin expansion. This was possible on account of dining recovery, which we saw. Our strategy on compact omnichannel format, so the new additions which have been happening since April 18 onwards, are on this higher profitable format, and our cost efficiency program has enabled us deliver highest ever restaurant EBITDA for Pizza Hut. Within this 14.8%, I always give a color on pre-18 and post-18 restaurants. So the stores which have opened post 1st April 18, they are delivering now, moving from mid-teens level of profitability towards high teens. And this is enabling us to drive margin expansion on Pizza Hut. So overall, very heartening performance on Pizza Hut, especially since that our compact omni-channel strategy being played out, and we have been able to deliver a significant margin expansion on the brand.
From a Shah perspective, let me first give you a quick insight into what is happening on ground in that country. So we saw the images of the of the general public uprising against the government and against the president and the prime minister. We saw what happened there. After that, there's been there's been a prime minister who's been appointed. Little more stability from a political perspective. I think people are realizing that there isn't a silver bullet answer to their issues. From a general consumer and general public perspective, inflation has hit them quite hard, and month on month we have seen inflation. Overall, general food inflation, they've been hit. We have taken price increases, but I think we have to be able to still retain transactions. We have still not taken price increases in line with inflation, and I think Vijay will give you a little bit of color on that. Having said that, availability of gas, electricity that enables us to do business has slowly and steadily stabilized and perhaps improved. And that is on the upward tick. Q1 typically is a low quarter for us from a seasonality perspective in Sri Lanka. Q2 onwards is when, if I just look back at the trend over the last 5-6 years, Q2 and then Q3 are the are the best quarters. So I'm anticipating as the business stabilizes, as the overall environment and macroeconomic conditions stabilize, our business also should do well. We continue to be the number one QSR operator. Internally, we monitor our market share, and this is our estimates of market share, and we believe that we have steadily increased and gained market share in the total QSR business in Sri Lanka. So we continue to do better than anyone else in Sri Lanka, and again that's because of our advantages. The brand is very powerful. Our innovation and product program is very strong. We are most accessible, highest number of restaurants we got there, and we have our own delivery capability also. In June, July, when there was severe shortage of petrol, for our delivery vehicles, we hit upon quite an innovative idea of delivering on cycles, and about 10-12% of our total deliveries was then being handled on cycles. And now we have as fuel has got more available, we are able to deliver again back on our bikes. So Sri Lanka, from a overall perspective, I think we have seen the worst of what is to happen there. We have continued to open stores in Sri Lanka because we see that as an opportunity, and we opened 2 Pizza Huts and 1 Taco Bell in Sri Lanka in the quarter. So, Vijay, the numbers?
Yeah. Slide 34. For ADS grew by 53% in LKR terms. Overall, SSSG was 53% in LKR terms. Our ADS grew by 34% in LKR terms at 333,000. In India rupees, due to translation impact and due to currency depreciation, our ADS dropped by 18%. Our revenue in LKR terms grew by 93%. And while you convert into India rupees, it grew by 17% for the quarter. Gross margin had a big impact on account of high inflation, and we were actually estimating this. And the idea was to minimize the impact at a restaurant EBITDA level. And more specifically, the idea for this year was how do you actually try and deliver and grow the absolute EBITDA in LKR terms. So while restaurant EBITDA dropped by 250 basis points, the LKR EBITDA margin actually grew by 65%. And when you convert that into India rupees, it was flat year on year. So overall, as Sanjay mentioned, external challenges continue to remain, and it gets further aggravated by the fact of depreciation of the currency when you translate the numbers in Indian rupees for consolidation. However, Sri Lanka used to form 25% of our company EBITDA mix in FY22, which has come down to now close to 10% in quarter one of this particular financial year. And this drop, in spite of this drop, this impact has been not just mitigated, in fact surpassed by the India business performance. And this has allowed us to still deliver an overall very healthy quarter and a highest ever corporate EBITDA of 111 crores. Over to you, Faizan. We can open the session for Q&A. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Percy Panthaki from IIFL. Please go ahead.
Hi, sir. Just wanted to understand, firstly, for your India business, typically, what would be the Q1 ADS as a percentage of the full year ADS in a normal year?
The Q1 is typically is on annual average. In terms of seasonality, I can just explain you how the quarter-wise seasonality plays out for Sapphire Foods. Q1 is typically annual average at a restaurant EBITDA level and at a corporate EBITDA level. Quarter 2, we see a slight dip on account of seasonality, especially on our KFC business because of the various festivities, the various religious festivities, the Shravans in the north, Shravans in the west, the Navratras, which impacts us, the quarter 2 seasonality. This gets all more than compensated by our Q3 performance, which is a festive quarter where the sales actually goes up. So quarter 3 is higher than the annual average, and quarter 4 is typically the annual average. So Q1 and Q4 is annual average. Q2 drops a bit, which gets more than compensated by the Q3 performance.
And the Q2 drop is largely north and west. I mean, if I just look at north and west and non-vegetarian, that is the drop. And from a Pizza Hut perspective, I think it is reasonably stable right through the 4 quarters. Perhaps quarter 3 is slightly higher because of the festival. Did that answer your question, Percy?
Hello?
This is the operator. So one moment, please. Mr. Percy Panthaki, please go ahead.
Yeah, am I audible?
Yes, sir.
Yeah, so I was just saying, so Q1 is in line with annual average both on ADS as well as EBITDA margins.
Yeah, largely, yes, Percy.
Okay.
Second answer, Percy, because I thought you got dropped off. You were able to get an answer on the entire seasonality, Q1, Q2.
Yes. I was able to hear you. Yes. Okay. Second question is on Sri Lanka. So, just wanted to understand in terms of the margin trajectory. See, Q1 has done 15.5%, but was it a sliding scale across the 3 months? I mean, the exit margins for the quarter, were they significantly lower, and therefore Q2 margins on that trajectory, do you expect it to be below Q1 for Sri Lanka?
See, again, we don't get into quarterly guidance, but what I can tell you that we don't anticipate overall Q2 absolute EBITDA for Sri Lanka to be any worse off than quarter one. Largely should remain on the same trajectory as quarter one in terms of absolute EBITDA. And why I'm calling out absolute EBITDA again and again, because this is the year where it's going to be very difficult to predict the percentage margins. The way there is a high inflation in the country, the price calls cannot be every week price calls, right? And again, at the same time, you need to hold on to the transactions. So heartening part is that we have been able to hold on to the transactions in quarter one. So the way we are going to drive this year's P&L in Sri Lanka is in LKR terms. Can we hold on to the previous year's LKR EBITDA and drive upon that and grow upon that? So we anticipate a drop when you translate that EBITDA into Indian currency. Last quarter I had called out there would be a drop on translation. We anticipate this drop could be anywhere between now 10 to 20 crore rupees. This was the overall 50 crore rupees EBITDA last year. Roughly I'm giving you at a corporate level. So there could be a 10 to 20 crore rupees drop at India rupees level. But again, as I said, this has been more than compensated by our India performance, and then overall mix of Sri Lanka business at a EBITDA level has come down to 10%.
Okay, understood. So basically, the absolute EBITDA that you have done in rupee terms in this quarter, that kind of average quarterly run rate is sort of sustainable for the full year.
Yes, Percy.
Okay, understood. Yeah, that's all from me. I'll come back in the queue if I have more questions. Thank you.
Thank you, Percy.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. Ladies and gentlemen, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Jaykumar Doshi from Kotak. Please go ahead.
Hi, thanks for the opportunity.
How are you?
I'm good. Hi, thank you. Thanks for the opportunity. Just a follow-up on what Percy asked on Sri Lanka. Look, if I were to from what I recall, your brand EBITDA for Sri Lanka was around 70 crore, 72 crore last year, and corporate EBITDA was 52 crore. So there is a corporate overhead of 4 to 5 crore per quarter. When I look at this quarter's 10 crore brand EBITDA, I would assume that corporate EBITDA would be 5 odd crores. So when you're indicating that corporate EBITDA for Sri Lanka will not be more than 10-20 crores lower than last year, you are indicating 30 crores for full year at least, and which means that you are assuming significantly higher, or rather in absolute terms versus 5 crore or 6 crores this quarter, you are expecting improvement. So are you seeing any improvement on the ground, or you think that the political stability will gradually sort of translate into recovery, or allow you to take more price increases to offset inflationary pressure?
So a bit of correction in those numbers, Jay. So when you look at 5 crores corporate overhead last year, when you translate into Indian currency, even that translation would drop.
3 crores. 5 crores. Okay.
And that's why the math, if you are estimating 10 crores just on EBITDA, the math says that it has to be in the range of 7 odd crores. That's why I said it should surpass 30 odd crore rupees for the current year. I think that math would...
Understood, got it.
Restaurant EBITDA, yeah, you understood, yeah.
Perfect. Second question is, look, this quarter we have seen very strong, recovery or sequential performance, or more or less full recovery in dine-in for all dine-in-centric QSR, be it McD, be it sort of KFC. We witnessed some weakness in Juby's results versus expectations. Today on your channel mix, it clearly indicates that Pizza Hut dine-in is still 85% recovery versus FY20 levels. We've seen similar sort of trends for Pizza Hut of Devyani as well. So do you think pizza as a category, this is a new normal where more or less all stores will settle at a lower, post-pandemic will settle at a lower dine-in absolute sales than where it was earlier? And if that is the case, so are you sort of, are you getting that feeling? First, could you give us some thoughts or insights there?
Not so at all, Jay. If I just look at some of our strong malls, if I just look at Bombay, Mumbai, and if I say Infinity, In Orbit Vashi, Seawoods, Seawoods, we are not there. Some of these malls, our dine-in is back. In High Street, dine-in also is back. I think it's just a matter of time. It's just a matter of time that we'll see full recovery on Pizza Hut also. It is pockets where it is not recovered fully. So Karnataka still today, it is not, or in quarter one, it's still not recovered fully. And I think when we speak to other people, Bangalore from a retail perspective was still not back to pre-COVID levels. So I think pizza as a category, we can't extrapolate it, at least for Pizza Hut run by Sapphire, not at all.
Understood. Now you mentioned that specific pockets in Karnataka, Bangalore, some malls where you're seeing weaker recovery. When you talk to other brands, and at least I'm sure you don't manage KFC there, operate KFC in Bangalore, but is KFC recovery or let's say McD recovery in those malls, those markets also lower than pre-pandemic? Have you had a chance to check that?
I don't know that, Jay, because we don't run KFC in Karnataka, so I'm not able to comment on that.
Understood. Now, my final question is for Vijay. So, Vijay, you did mention that first quarter EBITDA is typically average of full year. So, it means that 72 crore, if everything being normal, should ideally mean you would do 285 to 270, 288 crores of EBITDA full year. Does that factor in? The store addition that you've also planned, or this is the bare minimum and store addition could add a bit more?
So, Jay, again, I would not get drawn into an annual number over here, annual number guidance. I just tried to give an indication on trend, how quarter one is and how quarter two, quarter three, quarter four. As Sapphire we would always avoid giving a quarterly or annual number-based guidance. So that's for
that trend takes into consideration store addition. Is that right?
So, Jay, what I actually meant was percentage margins, right? So percentage margins of 13% is what we said is typically an annual average. So you are drawing me into a conversation where how much is the absolute EBITDA considering the store additions. I will not get drawn into that conversation, Jay.
Jay, and plus, in any case, your model is so detailed that we might have to come to you to say what will happen to us in 2 years down the line.
So, I was tempted to ask this question because I know you don't guide, but Percy was asking that question on ADS trends, and you yourself indicated EBITDA trends. So I thought I might as well push my luck. Anyway, thank you so much.
Thank you, Jay. Appreciate your call.
Thank you.
Thank you. The next question is from the line of Kapil Jagasia from Edelweiss Financial Services. Please go ahead.
Thank you for taking my question. First of all, congratulations for a great set of numbers, especially because of disruption in Sri Lanka. Sir, my question pertains to Sri Lanka operations only. So, if you could, let us know, what would be the inflation for a raw material basket in Sri Lanka, and what would be the cumulative price hike taken by us so far in this region? So, if I'm not wrong, you had mentioned something like 15% price hike taken in the last quarter. So, any more price hike taken this quarter? The ballpark number would be fine for both.
Yeah, so roughly another 15 to 16% price hike in quarter one FY23, whereas the inflation would be anywhere between 30 to 40% for the quarter.
Okay, so the cumulative inflation would be like if we look from the last 12 months perspective?
It would be upwards of 60 odd percent.
Okay, so are we envisaging like further price hikes, or like are we like done for now if the situation remains the same?
Too volatile. The initial indications of July, August say that the things are improving, but too early to take a call either way. So it's volatile. We'll just keep a watch how quarter two passes by. I think from quarter three onwards, we should be a bit more confident about how the situation goes and which direction.
Okay, okay. Thank you for that. My next question is, if I look at the Pizza Hut India ADS numbers for this quarter, it's at 61,000, and that's like FY19 levels. So we have kind of reached those levels. But if I look at the Domino's number at around 85,000, so we are a good 30% away from reaching that. So I'm sure we plan to aspire to reach those levels or even surpass it. So like, what would be the 2-3 key initiatives that we would be taking over the near to medium term to improve this number?
So I think one is plugging this gap in our product price portfolio. This forms a large portion of the overall pizza market, pizza under 100 rupees, and that has been one of our lacunae. Now, it was important for us to, when we launch something here, to do it in a manner that is quite Pizza Hut, and therefore from a product perspective also, we are known for superior products, so it has to deliver that kind of Pizza Hut product superiority. I think this launch is one important factor in us improving ADS. I think apart from that, as we continue to get our execution right, improve our accessibility on the brand, so our product innovation at the top end, so both the San Francisco dough as well as the Momo Mia pizza, all of them have done well. We've done a couple of pasta launches. So I think the story on Pizza Hut continues to be strengthen the areas where we win, which is product and innovation and our dine-in omni-channel experience. On value, on our regular range, we have, we are now competitive versus the principal competitor, and we have plugged one big gap in the portfolio. And on delivery, we continue to hold and improve accessibility. So this is continuing to execute what we have called out on the brand.
Also,
Kapil.
Just to add to that, Kapil, while you are saying bridging gap versus the number one competitor, I don't think they're in that particular race, because again the model allows us, our omnichannel allows us to deliver a higher profitability at lower ADS as well. So I've been talking about our new compact omnichannel model, which we have been opening since April 18, which is already now moving from mid-teens to high teens. And in this model, if the ADS goes to a 70,000 as well, we can deliver a 20% kind of a profitability. So that's the power of that model. I'm not saying that we can deliver 70,000 tomorrow, but we don't have to reach the level of 80,000 odd to deliver that kind of profitability. This is because of our dining mix, which gives us higher profitability.
Okay, and I'm sure like you would be spending a lot on A&P also, to improve this number, like going forward. Like, so just a ballpark number, just a bookkeeping number, what the A&P spend would be for us this quarter as percentage of sales?
So 6% of our revenue is towards marketing.
Okay, and this is like significantly higher than the 4% earlier, right?
It was always 6%. So 5% goes to a national kitty, which Yum would spend nationally on the brand, and 1% happens through a local sales marketing.
Okay, so we are kind of, looking to settle at this number. 6% can be like, we would be looking at this number going forward.
And we are happy with that particular percentage. It's not either going down or going up at this level.
Okay, sure. Sure. Thank you. Thank you for answering all the questions. I'll come back to the question queue. Thank you so much.
Thank you, Kapil. Bye.
Thank you. The next question is from the line of Krishnan Sambamurthy from Motilal Oswal Institutional Equities. Please go ahead.
Yeah, hi team. Are you surprised by the resilience of the takeaway channel, particularly for Pizza Hut, sustaining at 16% despite the recovery that's happening on dine-in? And what do you expect this proportion to be going forward?
So again, while mix are good to look at, we don't really predict mix, because what happens if there is one channel performing far superior to other channels, the mix can go up and down. What we look at is at what levels we are compared to the previous quarters or the previous years. And takeaway at 110%, I think we are comfortable at this level. And from here, as the overall business grows, with our Flavor Fun addition, I think the growth should come across all the three channels and not just one channel versus the other. But difficult to comment on a mix.
Yeah, so I think we have to look at absolute ADS here, Krishnan. And at 110%, we have recovered perhaps slightly above FY20. That's the way to look at it.
My question was more from a perspective that I would have thought that once dine-in comes back, COVID restrictions ease, there was an expectation that takeaway as a channel may decline, and it is still sustained at higher levels.
So I think someone else also asked this question, and we have been consistently saying that dine-in will come back. When dine-in comes back, it will overall add to the sales. We don't expect either takeaway or delivery, which is really off-premise consumption. Though takeaway, someone is coming to our premises and ordering, they're still taking away and consuming it at home, and that component of our business continues to hold. So it's just contributions here are less meaningful than how we have recovered from an absolute basis.
Got it. Thanks, Sanjay. Thanks, Vijay.
Thanks, Krishnan.
Thank you. The next question is from the line of Devanshu Bansal from Emkay Global Financial Services. Please go ahead.
Yes, sir. Thanks for the opportunity and congratulations on a great set of numbers. I wanted to check with this plugging of a key gap through Flavor Fun in Pizza Hut. Are we also revisiting our 7-8% SSG guidance that we have provided for this brand?
No, we are not revising our guidance at this moment. So let it play out, Devanshu, and then we will see.
Sure. And what is the... Sorry.
But we are very excited about this launch.
And a successful traction here can actually bump up our SSG. Is this a right way to look at it?
Yes, potentially yes.
Okay. And you indicated that Q2 typically for KFC sees a decline in ADS due to festive season. And can you sort of ballpark quantify what is the level of decline in Q2 ADS versus Q1 ADS?
Yeah, so first of all, I just want to explain this. This happens, because our KFC is largely north and west. So we've got Tamil Nadu also. When you look at us, we are perhaps impacted slightly more. We recover also equally fast. As soon as, for example, right now, Shravan ends in north today. From tomorrow onwards, people will do revenge KFC eating. But for the short term, there is this drop that we see.
Can you quantify this ballpark based on historical trends?
So again, we don't want to get into a specific quarterly numbers. What I can tell you is, again, at a restaurant EBITDA level, typically quarter two, we see 100 to 150 basis points kind of a drop at a KFC level due to seasonality factor. Again, depends upon where the Navratras are and which quarter it is falling. Sometimes it falls in quarter two versus quarter three. Partially it falls in quarter two versus quarter three. And the same recovery happens in quarter three. So internally, the way we look at is quarter two, quarter three combined. That quarter two, quarter three combined gives us an annual average for us. Again, this year the Navratra starts from last week of September. So again, we'll have that last week of September Navratra impact. So difficult to predict quarter on quarter, but that's the range we see an impact at a restaurant EBITDA margin level.
Got it, sir. And Juby took a certain impairment charge for Sri Lanka operations in this quarter. Though it was a non-cash charge, but just wanted to check, do you also foresee any such impairment for Sri Lanka operations?
So again, at least not at this point in time, because we continue to deliver our Lanka numbers in LKR terms. So the business continues to grow over there. Even in the current quarter, the LKR terms, we have actually grown our profitability. And again, for the full year, if you are able to deliver the same number as last year or marginally grow our EBITDA in absolute terms, I don't think it will require to take an impairment charge. But again, the situation needs to be monitored quarter on quarter.
Sure. And lastly, what is the capex inflation that you are seeing both for India and Sri Lanka operations?
Sorry, come again? Sorry, come again?
What is the capex inflation that you are seeing both for India and Sri Lanka businesses?
So for India business, we have seen inflation in the range of anywhere 7 to 8% on both the brands. Sri Lanka, this is in the range of 15 to 20% capex inflation.
Sure, sir. That's it. That's really helpful. That's it from me.
Thanks. Thanks, Devanshu.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi. Thanks for the opportunity. A couple of questions from my side. First, on ADS recovery, it has been heartening in both the brands. But inflation has also a decent role to play in ADS number for the industry at large also. So just wanted to know, in terms of volume, where are we tracking versus pre-COVID number, bill transaction, bill cuts, if you track? I'm sure you must be tracking it if you're comfortable giving any qualitative comment also on that.
Yeah. So I don't know the immediate numbers from an ADT perspective, but I can explain to you ADT versus quarter one of last year. ADT and ADS are in the same trajectory.
In fact, our ADT has grown faster than our ADS. So both the brands in India, we have grown transactions higher than the SSSG growth.
As compared to last year.
So that's heartening for us.
Wow. And any indication versus pre-COVID, 1Q FY20?
So from a transaction point of view, see, if the recovery in case of KFC is just about 100% and we have taken a price increase, so in terms of transaction, we would be trending below pre-COVID levels. Same thing would be for Pizza Hut because we have taken a 5% price increase even in case of Pizza Hut as well.
Thanks. Second question is, you spoke about how we have actually filled the gap in our portfolio. Just wanted to understand, when you go about menu innovation, it's always difficult to manage the conflicting objective of managing gross margin at that particular offering level and also obviously filling the gap in white space in the portfolio. So how do you go about it? Is it that each product, each launch matches certain gross margin threshold, or you play it at a very portfolio level and perhaps not at gross level, but at EBITDA level, it kind of compensates the margins?
So then it's a combination of both. So each launch, you have to individually measure the gross margin for each launch as well, and then you have to predict what kind of mix it would turn out. And that's why we do pilots in various states before we actually do a national launch. So that's at an individual level. But again, at the overall level, not just the new product launches. If you see even the inflation has impacted us in quarter one, the idea is to keep an eye on the ADS and the throughput. With the dining recovery happening, it has added to the overall revenue of a particular store, which gives us a huge operating leverage in terms of the cost management. It allows us to deliver a expanded restaurant EBITDA margin in spite of dropping gross margins. So this particular category which we have launched, Flavor Fun, we don't expect a material impact on our gross margin level. It would definitely have some marginal impact, but not a material impact. Whatever impact it will have, we expect it to get more than compensated by the throughput it will add to the store, and thereby give us actually an expansion in the restaurant EBITDA margin.
Sure. And Vijay, you made an interesting comment that the new format allows us to play this portfolio game. Does it mean that some of these offerings are more profitable in delivery versus dine-in, and hence now with the very omni value proposition that we have, we can experiment much with the mass and offerings?
No, that's not what Vijay meant. What Vijay said was, because of our strong dine-in contribution in an omni-channel format, versus if you are dependent purely on delivery or largely on delivery, omni-channel restaurant at slightly lower levels of ADS also potentially can deliver similar profitability at a restaurant level to the market leader. I think that's the point that Vijay was making.
Okay. Clarified. Thanks and all the best.
Thank you very much.
Thank you.
Thank you. The next question. We'll take the last question from the line of Amnish Agarwal from Prabhudas Lilladher. Please go ahead.
Yeah, we can go up to 5:45. Yeah, so we'll take a few more questions after this. Please, Amnish.
Yeah. Hi, sir. I have a question mainly on your new launch, which is your Flavor Fun Pizza. So the question I have is that how is our product, or what is the difference between our product vis-a-vis the Pizza Mania, which Domino's is selling from past so many years? That is one. The second part is in terms of quality, like Pizza Mania, usually it's said that it is not having mozzarella cheese but cheese sauce. So is our product different from that? And the third is, what percentage of the total pizza market is in the less than rupees 100, or you can say these kinds of products? So this is my question.
So I don't know about the competitor's product. I'll just tell you what Flavor Fun is all about. And so we didn't look at competition specifically and try to match their product, nothing. What we did was, if we had to have a pizza under 100 rupees, what is the kind of offering that a consumer would love from Pizza Hut? And therefore, we've got 5 different sauces. We've got a cheesy dressing. So you're right, it's not mozzarella cheese. It's a cheesy dressing. And we've got 12 different pizzas with different toppings. So I think, if you have the product, like I said, you'll understand as to. So each pizza also has 2 toppings at a bare minimum. So and this is the product that we have launched. Roughly, I would think that. So, and don't hold me to these numbers, Amnish, because we are looking at unorganized sector also. In many of the markets that we operate, there is an unorganized pizza market also. I would think in a value sense, this would be anywhere between 20 and 25 and 35% of the market. So I'm talking of, and like I said, there are markets where there are small local players. Even there is an opportunity for Pizza Hut to play.
Okay, and that's very useful. So thanks a lot. This was my only question.
Yeah, and I'm inviting you again, Amnish, to go and try out the product. It's sensational. Huh?
Yeah, sure, sir. Sure.
Mr. Agarwal, does that answer your question?
Yeah.
Thank you. The next question is from the line of Percy Panthaki from IIFL. Please go ahead.
Sir, can you give some idea on Sri Lanka, given the macro disruption? How many stores are we planning to add this year on a net basis?
So again, we are not giving firstly annual guidance. We said when we had 550 restaurants across the 3 verticals, we said we'll double it over 3 to 4 years. We are holding on to that guidance. So this year we don't want to give a specific number, but hopefully double-digit number even this year.
Okay. And for KFC and Pizza Hut, you are not giving an annual guidance for the India addition?
No, none of the businesses.
None of the businesses we give an
So again, 3 to 4 years will double the count, and I think we are on track for that particular process.
Okay. And I just wanted to ask, your store openings this quarter, they should not be treated as a run rate for the annual number, right?
No, Percy, you are asking the same three
question.
different ways, but I am not giving you annual number. 550 restaurants as of 31st December across the 3 verticals will double it over 3 to 4 years.
Okay, sir. Thank you.
Thank you. The next question is from the line of Srinivas Iyer from Rockford Consultancy. Please go ahead.
Yeah. The question, good evening, and congratulations for excellent numbers. My question, you have already answered to Percy Panthaki. But again, I will ask you, in Q3 last we opened 68 store, and why have you slowed down?
Please use the handset mode. The audio is not clear from your line.
Okay. Am I audible now?
Please go ahead.
Yeah. In Q3 last year, we opened 68 stores. And why have we slowed down and we have opened only 37 in this quarter?
Yeah. So, Srinivas, we said this, that it's not a quarter by quarter number that we are putting out there. We are saying that 550 restaurants at the end of December, we will double that in 3 to 4 years' time. I think we have spoken enough now about quarter to quarter performance. The 68 to 37 again is comparison that is really not what we want to get into. We are still holding on exactly what Vijay talked about. And I think you can make your inferences from that, is my submission.
Again, just to add to that, Srinivas, you cannot really deliver exact number of numbers divide by 4 in each quarter. So you will have quarter which will have a lower number, a quarter which will have a higher number. Largely, we should be able to hold on to the number annually and over a 3 to 4 year period.
Okay, understood. Second question. Compared to other QSR stores, QSR companies, we are at a significant discount. What is your plan to address this issue?
So that you are the person who will tell us why we are at a discount. All that we can do is stay focused on our business. We are focused on our business. I've said this earlier also. I don't look at the share price from a day-to-day basis. I think people will understand our story and the way that we execute. So that's it, Srinivas. But I'm saying now once you put out a buy order on the stock, perhaps it will. I'm just joking, Srinivas. Yeah. But I think we are just focused on the business and to do well here. That's it. That's the only thing that we can do. Yeah. So I'm just saying from an interest of time perspective, perhaps we'll try and close this conference call. Anyone wishing to understand more, our channels. Rahul is our head of investor relations, and he'll help any of you all understand any specific things. Again, I want to reiterate, we've had a really strong quarter in Sri Lanka. While we have grown well from a Lankan rupee perspective, translated into Indian currency, we have dropped. We believe that we should be able to hold on to this absolute level as we move forward. But both KFC and Pizza Hut have had a very strong quarter, and we've overall from a sales, from a revenue, from a restaurant EBITDA perspective, from the outlook on the brands, we are very, very positive and confident about the future going ahead. So thank you all for joining in on the call. I appreciate your patience and your efforts in understanding our business. Thank you.
Thank you.
Thank you.
Ladies and gentlemen, on behalf of Sapphire Foods India Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.